Hi everyone, welcome. It's Jonathan here again. It's November 7th in the afternoon right now, Monday, and I'm basically going to be talking about the market and how it's doing and how we did in October that just passed relative to October of 2011. The numbers came in and I have them here. As was expected, prices are continuing to go up and they've gone up 8% from October of last year. Sales have also gone up 17.5%. And believe it or not, something that's a little bit different is the listings. So properties on the market has also increased by 18%. The average price this year in Toronto is $478,000 as opposed to what it was last year at this time, $443,000. So there's been an increase of about $30,000, $35,000. Now, obviously, that incorporates the numbers can be a little bit skewed in these averages because it incorporates the biggest multi-million-dollar mansion that has sold and also the smallest less valuable house that has sold. But in general, on average, those are the numbers. I get everyone asking me all the time, prices are crazy. Are they going to continue going up? Are they going to come down? Will there be a correction? That's a very, very difficult question to answer. If we could all forecast that, we'd all do well. My rationale is this: it's simple economics. I think that what dictates prices and the direction that they're going is simply supply and demand. Buyers versus sellers, in other words. Obviously, the less sellers there are on the market, so the less people are trying to sell their house, and the more buyers there are on the market, obviously the prices are going to continue increasing because there's more people, fighting and competing for that one property that comes up once in a while. On the reverse, if there's more sellers and less buyers on the market, sellers have to reduce the price in order to be desirable because now they're competing with more houses on the market. So they have to reduce to be desirable to a prospective buyer. In this case, the way the market is, obviously there's less supply and there's much more demand. The reason there's much more demand right now is because interest rates are very desirable and very affordable. They're at their historical rates right now, their historical lows right now. There's a lot of buyers out there looking to purchase, and the reason is because of these low rates and their small mortgage payments that they have to make per month. Until there's an equilibrium between sellers and between buyers, meaning there's almost the same amount of sellers as there are buyers, prices will continue going up. I don't think they're going to go up as fast as they've been going this last 6 months to a year. I don't think that's the case. I think that I'm starting to see a trend where buyers are starting to bow out of the multiple offers situation and competing on a house. Buyers are starting to be frustrated, and they want to wait it out. Also, the listings, have increased. That means that there's more sellers on the market than there were last year at this time, which is good. Obviously, there's not enough sellers to compensate for the amount of buyers out there, but there still are a lot of sellers. Now, if that continues to creep up, sellers continue coming up on the market and buyers continue, not rushing into purchases, then we're starting to reach an equilibrium. In order for prices to be normalized again and to come down, to where they should be, relative to income, relative to rent and things like that, there has to be less buyers. In order for them to be less buyers, interest rates have to be higher. Interest rates are way too desirable right now. They're very, very low, and a lot of buyers are buying because of that. Now, one suggestion that I do make to everyone, and I'll make it to everyone that's watching this too, is although you are capitalizing right now on the low interest rates that your bank is offering or your financial institution is offering, and it makes your monthly, you can service your monthly debt, you're fine. You don't have to worry for now. But in 5 years, when it's time for you to refinance, you have to be careful because if interest rates in 5 years are higher than they are now, which presumably they should be, it's going to be very difficult for you to, continue servicing that debt if you're making only the minimum payments right now. So what I'm saying is, yes, your mortgage is a little bit high, but you can still afford it per month because the rates are so low. But my suggestion is to you, within your first 5-year term, try paying off as much of that mortgage as possible. Don't make just the minimum payments. Accelerate your payments. Put lump sum payments down on your mortgage if you can. Because in 5 years, when it's time for you to refinance, if you haven't knocked or chipped away at your mortgage at all, and your interest rates increase, it's going to be much more difficult for you to afford that house. So be careful. There's still a good time to buy because, again, rates are low and the property is affordable. But just be very careful. Don't spend your money foolishly. Pay as much as your mortgage as you can. Live your life still, but and that's it. Until then, prices will continue creeping up, maybe plateauing, but I don't see a correction anytime soon. In order for a correction to happen, interest rates have to increase drastically, and much more things have to happen in the market. Job losses, unemployment has to increase, things like that. I don't see that happening now. So prices will continue going up. If not, they will plateau. And my suggestion is to you, if you do own a house and you do have a relatively big mortgages, pay it off as much as you can, because rates won't be low forever. Okay. Till next time, guys. Thanks for tuning in, and we'll see you again.